All right, on this video, we're gonna discuss how to trade stocks and maybe even go a little bit farther into like, should you? What are the implications of that? If you're trading stocks, that implies that you are buying them at one price and selling them at another. And the vast majority of us have not done the research to be able to know if a stock is a good value, if it's a good price. Usually, for the vast majority of us, we're buying it on emotion. What do I mean by that? Somebody gave us a tip. We saw it in a news article. Just something off the street got us excited about a particular company, and we decided to invest money in it. The problem is, in a vacuum, if you're just throwing money at a hot tip, you're likely going to end up buying high without a whole lot of confidence in your choice. And if that stock falls or goes down in price, you are going to panic and sell. So that would imply that you're buying high and selling low. And that is a very quick way to lose a lot of money and scare you out of stocks entirely. And you don't need to do that. There's two approaches to this, and I will mention to you the ways that I approach investing in general. One is, when it comes to stocks, what is a stock? You are purchasing a piece of an individual company. You're investing in that company's future. You're getting a very small piece of ownership in that company, and you're expecting that company to do better over time. Right? So you really need to have faith in that company. If you're going to do that, find a company that is a great value, a great deal, and we can kind of explore that a little bit further, what that actually means, and hold that company for as long as possible. Buy and hold. So not buy and sell, but buy and hold. The other aspect of this, and it moves away from trading stocks, is to say, you know what? I'm probably not going to do enough research to really be able to figure out who are the winners and the losers. Sounds like a lot of work, sounds like a lot of stress. What if I get it wrong? It's high risk, you're all in on one hand. So instead, I'm gonna buy them all. This is what I do. This is called index fund investing. So what I do is I purchase a piece of the entire economy, the total stock market, all the publicly traded companies. I buy it when it's high, I buy it when it's low. And you might be thinking, well, doesn't that mean you buy the winners and the losers? Like you buy the ones that go down? Yes, it does. But here's the thing. A single company can absolutely go to zero. It can be here one day and not be here the next. But when you're buying all the companies, sure, some of them will go to zero, but others will double, triple, and quadruple in price. There's no upper end to what a company can do. They can create value out of thin air. And you don't really need to worry about which ones are going to be the winners and which ones are going to be the losers, because you're going to own them all. That's why I love index fund investing. And I'm going to show you a chart here. This is from 2008. Now, if you were investing in 2008, 2007, 2008, that was the cusp, the beginning of the Great Recession. It was a financial crisis that was caused in large part due to mortgages and home loans. It went downhill fast and it was scary. The stock market's value got cut in half, and it stayed cut in half for an entire year. Let's say that you had $1 million invested at the height of the market. Over the course of the year, your $1 million went down to $500,000. That's a lot of pain. It's a lot of pain. But here's the thing. In the worst case scenario where all your money was invested right at the peak and it went down, if you held that money from 2008 to today, your money would have doubled in price. Really, it's even better than that, in that if you had invested into the downturn and through the upturn, even though you had all the winners and all the losers, you would have done far better than just double your money, because you're buying the stock market on sale with minimal research. So if you want to avoid diving into the financials of companies, checking out their profit and earnings statement, really understanding the value of a company, and you want to avoid all the risk that's inherent to owning a single company and being all in on that company's success, just buy them all. That's my best tip for you today. Buy in 5 minutes or less.